Hey everyone, hope you're having a good day. So last week we had a relentless rally, pretty much non-stop, straight up through the entire week. This is a 4-hour chart, and it looks like we're only about 2% or so away from the all-time highs. So about 2.5%, somewhere in that range. And last week, so the SPY actually climbed roughly 4% last week. The Qs almost 5.5%. And the IWM at roughly 3%. So looking at our 4-hour chart, we're pretty much overbought right now. Most of the time frames were overbought. On the 4-hour, we're overbought. If we want to go to the 1 hour, pretty much overbought as well. The daily chart, the 1 year, 1 day chart here, still has some room to grow. So we could continue a little bit higher there. But on the 4-hour chart, one thing to note is we're basically back up to this same level we were at in early August. And I remember commenting last month, this gap basically that happened here late July. If we want to pull up the Fibonacci's, I said we would have to get above the 23% level. But not only that, we need to clear this gap right here and kind of close above this area. Being that we're only 2.5% away from the highs, I won't be surprised, especially if we close above this level here. I won't be surprised if we hit highs next week, if that does happen. But one thing to note, on a lot of the shorter time frame charts, we are showing overbought. So I would also expect to see probably some consolidation in this range here. It's also a possibility that we come back down as well. And, just watch for these levels here to act as support and resistance. So looking at the ETFs here for some maybe cash secure put ideas. We're 2% out of the money, 8/23 expiration. That is next Friday. Roughly that's 6 days to expiration. And I did go back to 2% just because the IV has actually dropped. One thing to note, this I believe has been one of the fastest drops in implied volatility that we have had, possibly ever. Basically we spiked up to, it's showing 66 right here, or I'm sorry, 55 right here. And, within 2 weeks, we're already back down to 15 again. And that's kind of somewhat unheard of, I would say. Just to have that fast of a decline in the volatility. It basically went from 55, down to 25 pretty much that week. And then it's continued to fall. So that is probably one of the fastest on record that I want to say this has happened. But anyway, back to the cash secure puts. So once again, this was the ETFs. We'll jump over to the weeklies here. So we're looking at 2% and 8/23, so roughly the same thing, 6 days to expiration, 2% out of the money. And once again, if you're not familiar, this is it's listed in alphabetical order. We have the last, the 52-week high and low, Friday's close, the percent change, yield if they pay a dividend. This is the expiration date. This is the strike for the cash secure put, the bid and the ask spread for that contract, the return on capital for that contract, the annualized return for that contract. Once again, this is just 2% out of the money here. We're showing the put contract listed again right here. And this shows the percent change to go from the 52-week high or to the 52-week low. Days to expiration. This tells us the delta of that contract. If it is below 30, it highlights green. And it looks like pretty much everything is here. This tells earnings. And this is going to be trading days, not calendar days. So this right here is going to be 8 trading days away. And then we have RSI and then the IV percent right here. And you can feel free to just pause this if you see something. And I also have this file available for free for all the Patreon subscribers as well, all the paying members. Looking at the calendar for next week, we have unemployment on Thursday, the FOMC meeting minutes on Wednesday. Even though the meeting was a couple weeks ago, they release the minutes normally a couple weeks later on Wednesday. So sometimes that does have the potential to move the markets. And then we're still, I think we're getting close to wrapping up earnings season. It's still got a couple weeks left. But it looks like a lot of just kind of retail stuff. You got Lowe's in here, Target, but not too many. And I have a trading strategy that I use for this also. I'll try and link it in the description as well. Basically, the short of that is you wait for the earnings to come out and find one that has possibly dropped. Maybe it's an overreaction. And we sell a cash secured put about 60 or so days out. And normally that works pretty well. But I believe that's all I have for you today. Thanks for watching. Have a great day and bye.